Palantir just reported an absolutely shocking, and I mean shocking, earnings report here. The stock's booming after hours. I've seen it up anywhere from 15% to 20% after hours as of right now. And what I want to go ahead and take you guys through in regards to Palantir is the stock, am I looking to buy more shares of stock? Am I looking to take profits tomorrow and sell some of this stock? Am I looking to just hold? I'm going to take you through all the earnings, okay? The important numbers, that is, that I thought were very important. There was some shockingly great stuff in this earnings report. There's some bad stuff as well that we got to discuss, okay? And even whenever a company of mine reports earnings, I look at it from all the different angles, the bad, the good, and I'm going to also share with you why this stock price is really moving huge, because a lot of people see the stock just blasting higher after hours. Like, what in the world? Like, this is almost a 20% move in a matter of less than an hour here? What's going on? I want to explain that as well, because something very transformative just happened here that matters significantly for the future of Palantir, okay? So, hope you guys enjoy this. As always, I appreciate every single person for being here. Thanks for being subscribed to the channel. And just also so you know, less than 24 hours now from the Becoming Master Stock Market and Dividend Investing Mastery sale. If you want that deal as soon as it drops on my two most popular, two best courses ever, check out the pinned comment down there and we'll send over the deal as soon as it drops in the morning, okay? It is our big Valentine's Day sale. In regards to me for Palantir, how many shares do I have right now? Well, this is my biggest account with Palantir shares. I have 4,300 shares. This is in the public account. And going into this earnings, I really haven't made any money or lost any money in regards to the stock. I'm right around break even, right? It's down about $200. As of tomorrow, obviously, I should be up quite immensely. It's just a question of how much am I up? Am I up like, a few $1,000s, or am I up like $10,000? And we'll see, and a lot of that will be dependent upon where that stock price moves tomorrow, okay? Now, in regards to Palantir, right off the bat, I always like to look at what are the highlights, okay? What are the highlights? Like, what's this company really trying to give us? Because whenever a company does their highlights section, it's basically them putting on their best face, putting on their perfect little makeup, their honest makeup, or maybe elf beauty, okay, and trying to look their best, okay. And so what does Palantir really want us to know about their highlights, okay? Well, first thing is, this is shocking. If you want to know why this stock price is up so massively right now, it is because of this sentence right here. We achieved GAAP, okay, that's General Accepted Accounting Principles. Which is the most true form of your net income, right? We achieved GAAP net income profitability for the first time in our company's history. That's significant. GAAP earnings per share of 1 cent. And I know that's not much, 1 cent, right, of EPS. But, that was just not expected, okay? That was not expected at all. A GAAP profitable quarter, but you just wait till we get to this next part, okay? Because that what Karp said on the conference call mattered way more, in my opinion, than just this. Revenue grew 18% year over year in Q4 to $509 million. I had that in red there because that's not good. For Palantir, that's not good. For a lot of other companies, revenue growth of 18% is great. They'll take that. But for a company like Palantir, they've really hoped to grow this business 30% plus, right? And so 18% is disappointing. But we do know when this company was talking about 30% growth, we were in a very different economic environment, right? It was kind of like boom times. Everybody was spending. And clearly that's not the situation. Companies have just gotten a lot tighter with their budgets, right? A lot less experimental with budgets around anything that's a spend. And we know Palantir is a significant investment. Governments have been taking forever to do deals recently, right? So that's hurt their revenue growth as well. Our U.S. government revenue grew 22% in Q4. Now, I have that in red because that basically shows me, when I read that as somebody that's been in the market for 15 years, right? When I read something like that, it makes me say, oh, U.S. government. So what's wrong with the rest of the world? Why do you need to highlight U.S. government, right? And it's not like U.S. government is necessarily a great number, 22%. We'd like to see it better than that, right? But it definitely shows that clearly there's some real weakness outside of U.S. government, specifically, obviously, in Europe, all right? And so government business has actually been a holdback for this company. We know there's two main segments for Palantir. It's government and it's commercial. And government's just been very lame with growth. It's taken forever to get these government contracts through. Hopefully a lot of them start coming through in 23, but it's been disappointing, just very disappointing, okay? Adjusted operating margins came in at 22% in Q4. We definitely want to see that get better over time, but that's okay for now, okay? 261 deals closed. closed, up 20% year over year from 217. That's definitely something we want to see, more deals getting closed there, okay? Now, in terms of their full year, our U.S. business grew 32%. I have that in green because that's phenomenal. You know, they got to keep growing that U.S. business at like a 30% clip or so. This business is going to be massive in the U.S., right? U.S. commercial, this is why I'm invested in the stock. Quite simply, you know, government business is awesome and stability, and, you know, there's definitely future growth there, right? But at the end of the day, this is why I'm personally invested in this, is because this U.S. commercial opportunity is exponentially bigger than what this company is actually recognizing as of right now, okay? U.S. commercial revenue growth of 67% year over year in fiscal 2022, okay? That's huge. Now, this next one, this is troubling. Why is this troubling, right? This is troubling in quite a big way, right? Revenue grew 24% to 1.9 billion in 2022, right? And the reason this is so troubling is because, you know, one, they wanted to grow this business 30%, but obviously we spoke about that before, right? But in terms of revenue recently, it's downtrended even further, right? 24% year over year to 18% now. So that's something I look at, and I'm definitely not happy with that. But as we know, this is one of the toughest kind of quarterly time periods we're going through recently, and a lot of these companies are troughing in terms of their revenue growth and whatnot. So that's troubling, but at the same time, I'm very understanding of the environment we're in. And, you know, look at even the biggest tech companies in the world, right? A lot of these companies over the past quarter reported revenue that was down or very, very slight growth. Like, we're talking single-digit growth, right? And so one part of me is like, this is super disappointing. But on the other side, I'm like, I mean, if you compare them against almost anybody else, this is actually amazing revenue growth. I mean, just really, really amazing. And I can tell you, if it was a stronger economic environment, there's probably no doubt that this company would have grown revenue 30% plus in this past quarter and the overall year. It's a very tough environment to do business, right? And it's getting better. We're likely troughing, but still, it's tough, right? Now, in terms of this matters in a significant way, right? And this was kind of like their third slide on their investor presentation. Thank you to our FoundryCon US 2023 speakers. And this matters in such a significant way, right? Because we need to see more and more big name companies, more and more Fortune 500 companies going out there and telling the story about how Palantir is transforming their business. The more we have that happen, folks, everybody that's a Palantir shareholder, right? The more we have that happen, the more other companies are going to jump on the ecosystem, and the more they can spread the word about this, okay? We need more stories being told out there, and Palantir is starting to do a great job of this by CEOs and CFOs and CMOs on how Palantir saved them an extra $50 million a year or helped them generate more money, right? We need more stories about that. The more stories that get out there, the more other CEOs and CFOs and decision makers, high-level decision makers at Fortune 500 companies are going to say, you know what, we need to use Palantir. It's a no-brainer for us. Whatever we spend on Palantir, we're going to get at least as much back from that, if not more, okay? And that's why I talk about this as a huge opportunity, because I feel like Palantir, what Palantir offers and what they're going to continue to offer, I feel like every major company in the world is going to have to consider Palantir. It doesn't mean every major company is going to use Palantir over this next 5-10 years, but I truly believe that every Fortune 500 company, every large organization is going to have to at least consider using Palantir for their business. They're going to have to at least consider, and that's going to be a big game changer. But they need more and more big companies talking about this, okay? Now, this is incredible, right? We achieved GAAP net income profitability for the first time in company history, right? And then we'll speak about, do they expect that going forward, right? Q4 2022 GAAP earnings per share of 1 cent, up 7 cents from quarter over quarter, and a 9 cent year over year, right? But the big significant portion of this is 3 quarters in a row of improvements. 3 quarters. This was around when the stock troughed. This was around when the stock was troughing in like the $6 range, right around here, okay? $6 it got all the way down to. And then what we've seen is consistent progress on GAAP earnings. So do we get another continuation of that in Q1? We'll have to see, okay? Now, look at this, okay? This is so big for everybody that owns a stock or is thinking about this stock, okay? You got the commercial business booming, 67% growth, right? Absolutely incredible. And you think about where this business can be. I mean, you know, think about how few companies are still even using Palantir, right? Imagine how many of these big companies are going to be using Palantir in the future. And so this commercial business, I think this business could continue to grow at, a 40% plus clip for years to go in the future, even in a weaker economic environment. Whether we're in a bad economy, good economy, or a great economy, I think we can continue to pound out 40% plus growth on a commercial business year over year over year for several years to go in the future, okay? And so this is significant. Now, the holdback obviously is government revenue. And these government contracts, they're going to come through. It's taking longer than expected. It's disappointing. We all want to see government business being stronger than it is, right? But at the end of the day, government moves slow. We know that. But when those contracts come through, they're game changers. They can move Palantir's business, tens of millions of dollars, if not $100 million plus in terms of their revenue, okay? So when these babies come in, it really pours in, okay? Now, this is one of the most significant, important numbers for a company like Palantir is net dollar retention. And just the way to think about this, a simple way to think about this, okay, is, you want to see over 100% net dollar retention. No doubt about it, okay? The further you go over 100%, the better. So if you can reach 110%, okay, now you're really talking 115%, that's really good. If you can go over 120%, that's great, okay? If you can go over 120% for net dollar retention, that's great. So Palantir, I wouldn't quite put them in the great category. I'd put them, this is a good number, this is a healthy number, this is an important number for the business moving forward, and that's a very important metric that we keep an eye on in future years when it comes to Palantir, okay? Now, this is super important. Our total customer count grew 55% year over year, okay? Now, why is this so significant? Well, one of the big things that people talked about with Palantir on why they couldn't consider this company is they said, well, great, they have these huge customers and government contracts that spend a ton of money with them, but they don't really have a lot of actual customers. They have a very small amount. And so that's been one of the turnoffs for a lot of people, even in viewing the stock, right? Or getting involved with it or even considering it, as how few customers they have. And so the more customers Palantir has, the more it's actually going to attract potential shareholders to this company, right? Which is obviously going to help the stock price over time. Also, if you're thinking about it in context of the business, well, shoot, if you keep growing customer count 40, 50% type numbers, that's going to be pretty darn significant over time. And Palantir's got to view this of like, we're going to grow with these companies. So yeah, maybe a company is only going to spend $1 million a year with us, right? Which for Palantir is not a lot of money. But that company might spend $3 million a year with you in the future as they grow, or $5 million, or $7 million, or $10 million, or gosh, dare I say $50 million long term, right? This is something that a lot of companies have really knocked out of the ballpark. I think Amazon Web Services is one of the best examples of this, right? Which Amazon's a stock I personally own, and I'm going to continue to buy that stock for quite a while in the future, right? Amazon Web Services, how they grew their business so significantly is they've been able to get a lot of apps, websites, whatever, right? Companies in general use Amazon Web Services. And then as those companies grew over the years, the amount of money they spent with AWS grew exponentially. I mean, imagine, let's say Uber signed up on AWS years and years and years ago, right? And let's say Uber was only spending, $50,000 a year with them, or $100,000, or a few $100,000, right? Do you know what Uber would spend on AWS nowadays? Oh my gosh, it would probably be tens of millions, hundreds of millions, like it's some ridiculous number, right? And so it's a beautiful thing as companies grow, and as they grow their businesses, they're going to grow with you. And the money you're going to make from those and your net dollar retention can go up and up and up over time, okay? And so this is so significant in the biggest way, and this is why this is so important from the shareholder side, attracting more shareholders, and just understanding you're going to be able to grow with your customers in a significant way, okay? Now, you want to see something shocking? This slide is shocking. Okay, not this part of it. Commercial customer count, great growth there, right? Up from, we were at 147 customers on the commercial side, now up to 260. That's phenomenal. But this second part is the shocking part, right? Average trailing 12-month revenue per top 20 customers, $49 million. $49 million. Okay, we're talking about when Palantir lands a big customer, it's a big deal. And this is why I think this other part we were just talking about, customer count growing so much, is so important, because we're talking about if Palantir gets in with smaller companies before they really become huge growth companies, right? Those companies could become the companies in the future that are spending $49 million a year on average, right, with the company. And that matters in a massive, massive way. I mean, imagine if, you could run the numbers on this. Imagine if Palantir had hundreds and hundreds of customers, right? Maybe even 1,000 customers that were spending an average spend of $49 million. Run the numbers on that. This is why this is so significant. Palantir, when they land a customer, those clients spend a lot of money with them. 55 deals were closed in Q4, right? Of at least $1 million. 11 of those deals were at least $5 million, and 5 of those deals were $10 million. You're not getting these companies to spend this sort of money, folks, unless they're extremely confident that whatever they're going to spend on your product, they're going to get way more back from it, okay? And when it comes to Palantir, the great thing is, right, is they land these deals with these companies, but Palantir is supposed to have the best of breed product by a lot, right? And so if these companies are spending, $5 million, $10 million, $50 million, it's very likely that, in my opinion, Palantir is going to be a very sticky product, and companies are going to continue to use Palantir in the future, right? And especially as they just make their product better and better. We know Palantir's always working to make everything they have better, right? And so I think Palantir is going to, their products, between Apollo, between obviously Gotham and all their Foundry, right? All these products are going to be extremely sticky. And whether you're a government or a commercial, business, right? You're going to likely stay in the ecosystem. You're going to likely continue to use that product and not shift from that product and continue to spend significant amounts of money, because you're going to realize, like, if I go somewhere else, it's not going to be a wise financial decision, right? So that matters in a significant way. Adjusted gross margins did grow to 82% from 80%. That matters. We need to continue to see that trend go on. I mean, I don't know. I don't want to say how high adjusted gross margins can go. Maybe they got a little bit of room there, but not much. And in terms of adjusted gross margins, just so folks know, that's basically they take out the stock-based compensation for those numbers there, which we know stock-based compensation has been an issue for Palantir for a while. It's becoming less of an issue, but it is still an issue, okay? Now, if you want to sleep well at night, this is a slide to look at to help you sleep well at night, okay? And if you ask me, how, with me holding the stock, how do I sleep well at night? This slide right here, okay? We ended 2022 with $2.6 billion in cash and no debt. They also have a $950 million credit facility, and it's completely undrawn right now, right? They also have, obviously, adjusted free cash flow that's very significant. And so this is not a company I ever worry about. It's not a company in financial jeopardy. I have 1 or 2 of those stocks that, we're like crossing our fingers that hope those companies get through 2023, right? Palantir is not one of those companies. There's no like, oh man, could they make it? Oh gosh, I'm so scared, right? And never mind if you're talking about GAAP profitability moving forward, then that just eliminates all those possibilities, right? So you got to understand how big of a number this is. Palantir's a market cap of less than $20 billion. I mean, we're talking about going into today, maybe Palantir's market cap was 16 billion or something like that, right? Oh gosh. I mean, we're talking about, this is like, 15% of their market cap roughly is just cash sitting on the balance sheet, right? That's incredible for a company that's a 15 or 16 billion dollar market cap, whatever it is, right? That's nuts. Absolutely nuts, folks, okay? Now, you want the bad, you want me to give you the bad. Okay, I'm going to give you the bad, okay? Here we go. Revenue between $2.18 billion to $2.23 billion expected for 2023. That's disappointing. That's not exciting. That's not great. Okay. Adjusted income from operations between $481 million and $531 million. That's okay. But this is disappointing. Okay. Q1 revenue expected $503 million to $507 million. Disappointing. I think analysts were at 520, I want to say. Average analyst estimate, I believe, for this coming quarter was 520. Okay. Adjusted income from operations, $91 to $95 million. Okay. So let me just be very clear. Disappointing overall. Okay. But here's the important part of this. Okay. If you want to know the important part of this, I'll tell you the important part of this. Okay. This could be very much a situation where Karp and the team is learning the game of Wall Street. This company's been public for a couple years now, okay? They're no longer a new public company. They've been public for a few years now. So, the game of Wall Street, if you want to know how to play the game of Wall Street, right, which is what you're doing running a public company, it's not just about running your business well. It's not just about having great financial statements and growing your business and having great executives and being able to tell your story, right? The other component that gets lost in the game of Wall Street and something that if you want to see your stock thrive over time, if you want to see the analyst community really get behind your company over time, and if you want to see investors really get behind your company over time, and traders as well. The game of Wall Street, and the most important thing is, you want to set expectations that are not too high. And you want to always come in and beat your expectations. You want to become a company that, for lack of a better term, kind of sandbags your numbers a little bit. You might actually think you're going to do this number, but you come in with guidance that's a little low and you say, well, it's kind of a scary environment. We don't know, so we think we're going to do these numbers, okay? And you just put it very low. You set the bar low. And then as the year comes in and you come in quarter and quarter, you beat on revenue, you beat on EPS, you beat on margins, and you beat, and you beat, and you beat, and you start becoming a company that folks know as a consistent number-beating company, which is one of the best things, because one of the things Wall Street hates more than anything is a company that sets too high of expectations and then they don't meet those expectations and they come in and report disappointing earnings. And everybody says, dude, you said you were going to do this number. You said you were going to do this number. And what do we got? We got a huge mess here, okay? You don't want to become that company. So maybe Carpet and teams learned a little lesson over the past few years, being a public company and watching their stock go from $20+ to $6 at the low, right? And maybe they're kind of learning this game and realizing, let's come in with a little lower expectations and let's maybe have better internal goals inside the company and let's come in and crush those numbers. I don't know. We'll see, okay? Bottom line is this is disappointing in terms of those guides there. Okay, now, this matters here. Gross profit. So we got a reconciliation of gross profit to adjusted gross profit and adjusted gross margin here, okay? And if we go ahead and take a peek here, gross profit, $351 million, stock-based compensation, about $11.6 million there, right? Then we go down to 11.2, and now we're in the tens in terms of stock-based compensation. I think as the business continues to grow, stock-based compensation is going to become less and less of an issue, from $351 to $404 million in gross profit there. That's what I like to see in a company like this, okay? Now, as I was prepping this video, I was also listening to the conference call. Amit had it on his channel, so I was like, okay, I'll just listen to this while I'm kind of prepping this video. And right off the bat, when they open it for questions, right off the bat, it was straight to profitability. What do we expect moving forward? Because, in terms of the past, Alex Karp and the team, they've really talked about profitability 2025. Karp doubled down on profitability. He absolutely expected him to be profitable on a GAAP basis in 2023, okay, which is, definitely a couple years ahead of time. So that's huge. Now, you might say, what's the reason that Karp is all of a sudden focused on profitability, okay? Now, you could say there's ulterior motives or whatever, okay? But what Alex Karp said on the conference call was very important. Okay, very important what Alex Karp said on the conference call. What he said is our product's so important to governments, to conflicts around the world, right? To commercial customers, that sometimes we get the question about our financial stability because we lose money on a GAAP basis. And so sometimes that scares people away. And basically what he was saying is by, us focusing, why we've been focusing so hard to get to GAAP profitability, is because that's going to alleviate a lot of the questions and concerns, not just from shareholders, but from other interested folks that maybe want to even use Palantir's product, but that were scared because it was ultimately a money-losing company in terms of a GAAP basis. And by showing profitability, shows more financial stability, along with obviously the great balance sheet. So, if this is a critical part of these companies, right, in governments, they can be sure that it's not like Palantir is going to have to face some critical issue with their company, right, in terms of financial stability. And so he said that one of the biggest reasons is for overall financial stability, because our product is so important to governments and companies in general. That's very important. We get to profitability so we can show financial stability for more than just shareholders. And so that's what Karp said. Now, maybe he's just getting profitability because Wall Street wants, the companies to get to profitability. Who knows, okay? But that's the reason he told. And, it kind of makes sense. Now, in terms of me in regards to Palantir stock, right? Is this stock a buy for me now? Is it a sell? Am I just going to hold my shares? Okay. So first thing we got to talk about, obviously market cap under $20 billion in regards to Palantir, right? Very low market cap, especially if you consider the type of cash this company has around, right? So I look at this a few different ways, okay? So first thing is, I'm not scared about this company whatsoever in terms of financial stability now at this point in time. With CARP doubling down on GAAP profitability moving forward, with the cash balance this company has, no debt, like that almost gives us like an A rating for this company in terms of financial stability, okay? So that makes me very attracted to potentially buying the stock. Not only that, now that we're talking about GAAP profitability, that gives me even more confidence in this company, right? Now, the next component of this is I do understand when companies get more confident, right? The contracts are going to come in. The deals are going to come in, right? People are all these CEOs and all these CFOs, if you hear them speak right now, they're all very concerned. And I mean, very concerned about the economy. They're all cautious right now. So which means they're not as likely to even use Palantir. And yet, even in this environment, Palantir is attracting massive amounts of new clients, right? Massive amounts. And so I'm very confident that as CEOs and CFOs get more certain about the future, which will definitely happen, I think, as this year goes along, right? As they become more certain, they're going to be much more likely to use Palantir. And then Palantir is going to kind of reach this like level of like critical mass where more and more folks are just going to like be talking about it in terms of these CEOs, CFOs of companies and spreading a positive message because Palantir really has a best of breed product. And they're kind of get a similar effect that Tesla had, just Tesla was obviously on the consumer side, right? Whereas like, somebody get a Model 3 or a Model S or whatever, and they tell their friends and family and they drive them around and tell them how amazing the car is, right? Same thing will happen with executives, and they'll tell the story more and more. And so Palantir's word will just kind of spread about, you got to have this software in your company. Like, what are you doing? Governments speak to other governments, right? Well, if they're friends, that is, not if they're enemies, right? And so that matters in a significant way. And it seems like CARP and the team is understanding Wall Street on a higher level than they have in the past and taking that more serious. And it also seems like CARP's in the team is starting, they're just starting, okay, to do a better job telling the story about Palantir and why this is a great company for the long term, okay? So when you put all those components together, am I interested in buying the stock, selling the stock, or just holding the stock? What I can tell you is buying, absolutely without question. The way I view this company, I think they're on their way, and it's going to happen rather quickly, okay? Within the next couple of years, I'm starting to throw off hundreds of millions of dollars in net income per year, okay? Hundreds of millions. And I think they're going to be on their way to $1 billion to $2 billion in net income. Now, this is a sort of company that can trade anywhere between a 30 and a 50 PE. So I think they're on their way to becoming a $1 billion net income company in a few years, right? If you go ahead and you throw, let's say a 40 PE on a company that's doing, $1 billion of net income, right? You're gonna command a market cap of about $40 billion in that situation, right? And I think they're gonna eventually get to a place where they got $2 billion rolling in, $3 billion in terms of net income, possibly even by the end of this decade. And so if you're wondering, how does this company grow to become like a $100 billion company, or maybe even multi-$100 billion company? Is by getting that net income to a place where they're starting to throw off $1 billion, $2 billion, $3 billion. And then you can start talking realistic about, those sorts of market caps, right? Which gives the stock obviously exponential upside. And they will always trade at a much richer valuation as they reach profitability because of their growth and because their bottom line is going to grow exponentially faster than their top line over this next few years. Like they could be growing net income at hundreds of percent while maybe only growing their revenue at 20% or 25% or something like that, okay? So Palantir is absolutely still a buy for me. I don't know when I'll stop buying Palantir, but I think I could continue to buy the stock this entire year, just to be quite frank. Obviously, the lower it is, the more I'm going to take advantage of shares. The more under 10 it is, I'm going to take advantage of shares, right? The more under 12 it is, the more I'm going to take advantage of shares. If the stock was to go back over 20, 25, I might pull back on buying a bit and then just hold. But I can tell you, Palantir is a game-changing company that one thing I'm going to make sure I don't do with this stock is take the profit too soon, because this is one of those companies that I think there's probably going to end up being some people that take the breadcrumbs and they miss out on the loaf of bread with this one. And in terms of those sorts of companies with these sorts of management teams and these sorts of opportunities, you got to just let those babies run. And so that's what I'm going to do with this one. So hope you guys enjoyed. As always, thanks for being here. Thanks for being subscribed. Make sure you take advantage of our epic once-a-year sale coming up here on Valentine's Day for my 2 most popular courses ever. There'll be a pinned comment to have that deal sent over to you as soon as it drops Valentine's Day morning. I appreciate everybody. Much love as always, and have a great day.